All right. Good morning, everybody. This is Steve Mahoney. I am a mentor with the Greater Hartford chapter of SCORE. Delighted to be joined today with my colleague, Joe Waxman, who's going to walk you through the best tips for financing your business. Before we jump into the material, just a couple housekeeping items. The session is being recorded, and we've also placed everybody's microphones on mute to prevent any background noise. That being said, we'd love to hear from you throughout the session. So if you have any questions or comments, you can do that a couple different ways. You can either click on the raise hand button at the bottom of your screen and I can unmute your line and you can ask your question, or you can type your question in the chat box and I'll keep an eye on that throughout the session and we can get those questions answered. And while on that topic, we'd love to hear from, looks like we've got about 4 people on so far. We'd love to hear if you're where you are in your journey as a business owner. So if you could put in the chat box, let us know if you're just getting started or if you've been in business for a while, and maybe any key questions you want to get answered today, and we'll try to make sure we address those. And before I turn things over to Joe, just to give you a little bit of background about SCORE, we are a nationwide organization of about 10,000 volunteers, and our sole mission every day is to help small business owners start their business and grow their business. We provide free one-on-one mentoring services. We also have a number of resources on our website. We have workshops and webinars like this one. And we also have a number of articles, templates, things like that to help you in running your business. If you're interested in learning more about SCORE and what services we offer, or to set up an appointment with a mentor, you can do that at our website, which is score.org. The Hartford chapter is greaterhartfordscore.org. We'll have that up on the screen later as well. And if you're looking for mentoring services, we've got areas of expertise across all walks of life. Every industry you can imagine, we could find somebody to help you out with. And also every kind of area of expertise, whether it's finance, like Joe and myself, marketing, legal, operations, you name it, we can probably find someone to help you out. So again, if you're interested in learning more about what SCORE has to offer and interested in meeting with a mentor, you can do that at score.org. So with that, I will turn it over to Joe. And Joe, I'll pull your slides up while you get going.
All right. Thank you very much, Steve. So my name is Joe Waxman. I've been with SCORE going on 11 years, and I've helped thousands and thousands of clients move through the rigmarole of how to finance your business. And it becomes difficult when you're trying to finance a business if you have poor or no credit, as some people may have. So we'll talk about that also. And since there's not many of us, feel free to jump in through Steve and we'll go forward. So on that note, let's move ahead, Steve.
Okay.
All right, next slide, please.
There you go.
All right, where do you begin? Well, if you're in business for yourself, or even thinking about business for yourself, it's critical that you keep records. Perfect example is if you're looking for a brick and mortar location and you haven't started your business yet, and you go out to look, well, keep records of that mileage, because the government allows you, I believe it's 59.5 cents. And this is money you're loaning your company. And it's money you can take off your taxable income, even though you haven't started your business yet. It's all in preparation. So record keeping is important. Lenders want facts. For those of you who don't know, lenders are asset-based lenders. By that, I mean, if you can prove to a bank, as my sainted father would say, that you don't need the money, they'll give you anything you want. But in real life, if you're in business 2 years or less, they will not loan to your business, they'll loan to you personal. And even if you're in business over 2 years, you must sign personal. No bank, and I mean no bank, is going to loan you money. if you owe the IRS money, forget banks. They will not loan you any money until you either have a release or a program from the IRS that says you're keeping up. Then they'll consider it, but more than likely, you're going to need a co-signer. So whether you seek funding now or in the future, keep records. And we'll get into that in a little while. Next slide, please, Steve. All right, so here's the sources of capital that are what we call traditional. Owner's equity investment. You've started your business, you've decided to sell to your business, your laptop, your printer, etc., and you put a price on it, and I'm making up these figures, so please don't hold me to them, of $500. That's a $500 equity loan investment that you've made into your business. If you have savings, investments, insurance with cash surrender value, you can use this to start your business. Friends and family, you can take a home equity loan, bank or credit union financing, credit cards, very expensive, but I've had clients use credit cards. I've had clients who are sole proprietors or sole LLCs, limited liability companies, who because of their financial situation have brought in partners. And if you are a stock corporation, that's a subchapter S or a C corporation, you can sell stock in your venture. LLCs, partnerships, and sole proprietors are not stock companies, so you can't sell stock. And then, of course, there are government grants. If you're minorities, or if you're opening up a brick and mortar building in a certain town, or there might be programs within your town or city. So check with your city or town government to see if they have any type of traditional or any type of capital available to new businesses, especially if you're going to be creating jobs. Next slide, please, Steve. All right, special and non-traditional. SBA guaranteed loans through banks, Department of Community and Economic Development, Agriculture and Rural Development Services. If you're going into the cannabis market, the Department of Agricultural and Rural Development Services will not loan you anything because remember, cannabis is still federally not recognized. Angels and venture capitalists and crowdfunding. Now, SBA loans through banks. If you go into a bank and they say no to you, you can then say to them, I'd like to apply for an SBA loan. The bank, if it's under $350,000 that you're looking to loan, the SBA, you'll fill out 2 additional pieces of paperwork. And if it goes through, and it's really up to the bank because SBA automatically will underwrite it if the bank sends through the paperwork. And here's the way it works. 75% of the loan is guaranteed by we, the people, meaning if for some reason you go bad, the bank's only on the hook for 25% after they sell your assets, which could be your car, could be your home, could be your furniture, could be anything of that nature. So SBA loans are also at a higher price tag than normal loans. Currently, I believe they're 2 3/4 or 3 3/4 percentage points higher. Steve, can we go on to the next slide, please? All right, crowdfunding. For those of you familiar with crowdfunding or not familiar with crowdfunding, I call it professional begging, okay? Crowdfunding was started through the Crowdfund Act and Jobs Act. Traditional financing versus crowdfunding. The nice thing about crowdfunding is they're not loans. There you must work your media, your social media, and you have to work it hard. Steve, next slide. I believe we'll go into more on this. All right. Your microfinance is Kiva. Kiva is a quasi crowdfunding. You can get up to a maximum of $2,000 to $4,000, I believe, at last time, but you must pay it back. So it's not true crowdfunding. Axion USA, same situation. I'm not going to go through all of these, but when we go with reward-based crowdfunding, the big ones are Kickstarter and Indiegogo. I like Indiegogo best of all. Let me explain how crowdfunding works. You must come up with a video on your business of what it is you're looking to do. Let's say, I'll do something easy. Let's say you're a writer and you want to get enough money to publish a book or publish a play, or you have songs that, excuse me, my allergies, that you want to try to get published and you need money. You pick the amount you think you're going to need, 10,000, 200 million, whatever the amount is, becomes your call. You do a video, and basically in the video, you say, hi, I'm Joe Waxman. I own Guru Enterprises Group, which is a investment portfolio. And if I invest into your business, a portion of the return on investment will go towards, I don't know, starving children of Africa. There should be some type of social reward for people giving you money because they're making donations to you. Now, there's a cost for setting up that video with the crowdfunding platforms, anywhere from $300 to $750, $1,000. And you're given a time limit, 6 weeks, 8 weeks, whatever it is, to hit your goal. Here's where the differences come in. Kickstarter, you must hit your goal. If your goal is $10,000 and you raise $9,999.99 and the clock runs out, you get nothing. Also, if I had made a donation to your company, at the end, my credit card is not going to get hit. You get nothing. Indiegogo, same situation. If you raise $4,800 and the clock runs out, you'll get your $4,800 less a fee of, I believe it's 5%. So you're going to have to work your social media, your platforms, your Twitter, your Facebook, your LinkedIn, all of whatever your digital media is, daily, 2-3 times a day, because that's the only way you're going to get the money. It's not like Field of Dreams, build it and they will come. Doesn't work that way. You've got to go out and work the media. You don't have to pay the money back under Kickstarter, Indiegogo, or Fundable. But, I mean, you don't need a social conscience. But if you're looking for people to donate to you to get started, and again, there's no background check. I mean, there was one instance on Indiegogo where I believe it was, and again, this is from memory, so don't hold me to this totally. It was either the Grateful Dead, one of their people, or the Rolling Stones, where they were going to do a movie and they went out to crowdfunding and they were looking for, I want to say, 6 million, but they raised 8. You get to keep the 8. So if you hit your goal on any of these, you get the money less the fee. Indiegogo, you get to keep whatever you raise. So that's why I like it. You're going to do work. You want to get rewarded for what you do. Next slide, please. So sources of capital, SBA, that's a guaranteed loan, all right, that you sign for personal. Anybody who owns 20% of your business, if you have a junior partner, anybody who owns 20% of your business must co-sign the loan. Federal government grants, there used to be quite a bit for women and minorities. Some are still around, but you got to go out and really look. So go out to www.grants.gov. HEDCO, that's what we call a third-party lender. If all others have said no, HEDCO and CEDF are organizations where I call it higher risk. If normal loans today are, I'm making up a figure, 4% or 5%, HEDCO and CEDF are anywhere from 9 to 13%. And they'll loan up to $250,000. And again, you sign personal. All right, Connecticut WBDC grants for women. That's not a bad one. They do a ton of underwriting. By underwriting, I mean you, and we're going to get into the paperwork you're going to need. You have to go in prepared, but you can do some exploration. The other thing I want to tell you while I'm thinking of it, if you decide to go the bank or the credit union route, and you say, you know what, I'm going to go out to Webster Bank, Key Bank, Bank of America, and Berkshire Bank, and one of those might loan me money. Don't do all those at once. Do one at a time, because each time you go in, if you go in to Berkshire Bank and Key Bank and apply for $50,000, make believe, when they pull your credit report, they're going to see that you applied to two banks. And even though you're asking for 50, they're going to figure you're going for 100. And this dings your credit rating. Your credit rating goes down at least 5 to 10 points in this particular case. So do one bank or one credit union at a time. And if they say no, then it's no. But understand that the multiple you do, as many people sometimes do, saying, oh, I got a great relationship with American Eagle, and I'm also going to go after Navy Federal Credit. It's going to show up, and whatever you're asking for, they're going to figure you're trying to double dip, so to speak. So just understand that. Minority business funding list on Connecticut.gov. That's there. And by the way, these slides will be available for anybody who signs up for free mentoring with us. And it's worth the price of admission because there's no charge. As Steve said earlier, we're a free service. SCORE will never charge you for what it is. The only time there'll ever be a charge is if, for argument's sake, it's an in-person webinar where there's lunch is going to be served or something like that. Then there might be a small charge to cover the cost of foods because we're a nonprofit and none of us get paid. This is all volunteer. Next slide, please, Steve.
Hey, Joe, before we move on, one thing about the SBA guaranteed loans that I've heard from clients is that while it's, I don't want to say easy to get, it's probably easier than a traditional bank, right? Because SBA is going to be targeted more to helping small businesses.
Not really.
Oh, it's not. But the point I was going to make was that the interest rate on an SBA loan is usually pretty high relative to a traditional bank. Is that right?
It's usually 3.25 percentage points higher than a normal loan. But if the bank doesn't think you're credit worthy to get a standard loan and you ask for an SBA, and again, it's under 350,000, if the bank puts in the paperwork, I'm repeating that, you will get the loan because it'll be automatically underwritten. But if the bank doesn't think you're credit worthy, or if you know you have under a 650 credit score, you might want to go into a bank and say, I'm interested in SBA loan because most banks aren't going to loan money to under a 650 credit score. All right. But when you go into the bank, you don't want to talk to the clerk behind the window. You want to talk to either a loan officer or branch manager. And you want to find out, and this is where SCORE will tell you, we have a list of banks we work with and give to our clients where they're very friendly to startups and new businesses. And we'll tell you exactly what to say. And I know with my clients, I call my bankers that I know, and for argument's sake, I would say, I got Steve coming in to see you, and he's a great guy. His credit score is 690. He living in an apartment, has been divorced or whatever, has a great business plan, and he has capital that he's put in, and he's looking for a business loan. So that's what you have to do. So minority business funding list. And yes, this should be, it's going to be, Steve, is this going to be available for downloading?
We'll have available for viewing.
Okay.
We'll get a link out to folks who've
Okay.
registered so that they can watch it again.
Okay.
Yes, thanks for that.
All right, next slide, please. All right, the loan application. What lenders and banks look for? Credit, good credit, and that's important. You go out and check your credit score. It doesn't cost you anything to check it, and you should know what it is. I had a situation where people came in to see me and they wanted to open a bakery. And these two gentlemen were underwriters for a major insurance company. They had money, but they needed additional money and didn't know the first thing about baking. Are they a good risk to a bank? Not really, only because there's no expertise in that particular field. All right, if you're going to go into the restaurant business and you say, my experience is in college, I worked as a waiter or a waitress, that's one thing. You have some experience. And my brother's an executive chef and he's going to work for me. Well, that's good. My mother was the house manager of, for argument's sake, I'm making this up, TGIF. So you've got a team that shows you have some experience. Your business plan, SCORE will help you. We will not write the business plan for you, but we'll help you, we'll critique it. The other thing is you got to have skin in the game. Adequate owner's equity. That's where keeping your records, driving around, looking, whatever you spent up front for your LLC, your tax dollars, because it's $120, I believe, for your LLC, $100 for your sales tax, EIN number, employer identification number from the IRS is free. And then your liability insurance, all of this is equity that you've put in, money you've loaned. And do you have sufficient collateral? So if it's a restaurant, is there equipment? Is there tables? Is there refrigeration unit? If it's a retail store, well, obviously your inventory. Or do you own a home? They may loan you the money without a second mortgage on your home or home equity loan, but they're going to ask if you're married, and if you and your spouse own the home together, they're going to ask for your spouse to sign. Banks try to avoid risk. So, and if you have poor, lousy, terrible credit, and you filed bankruptcy within the past 7 years, or you're behind on payments, then maybe we got to get you a partner who brings something to the table that you don't. It can't be just the credit, or maybe it's Uncle Louie who wants to loan you money. And there's pros and cons to that too, but this is what the bank looks for. Steve, next slide, please. All right, the 6 C's of credit: character, capacity. The best way to start a business, folks, part-time. If you're going to start your business, start it part-time. And again, my sainted father, who came to this country from Poland, always taught me, you don't give up bread in search of cake. Okay, it's an old saying, but if you're working and you have income coming in, and let's say you're working at an insurance company and you have flex hours where you can devote time to this business, you got a paycheck coming in, and so you have capacity to pay the loan back until you get started, as opposed to, I need $10,000, and when the $10,000, I'm quitting my job, the $10,000 runs out, and now I can't pay back the loan. Oh, I know, I'll borrow $30,000, and I'll have $20,000 till I get going. Again, unless you have a strong business plan, people have done that. Unless you have a super strong business plan and a good cash flow projection, and business plans are your best guess. All right. The banks or the credit unions or even investors want to see that. So collateral, if you have antiques, fine, that could be collateral. Capital, obviously cash is king. Conditions, what are the conditions? If the conditions are you can only get an investment from Steve, you're looking for $200,000 and you're going out to private equity, and Steve says, you know what, I'll give you 50,000, but before I give you the 50,000, I want to see commitments for another for the other 150,000. That's a condition. And then cash flow. Cash flow, also in your business plan, I tell all of my clients, have a line item, repayment of loan. All right. Maybe it starts in the 6th month, 8th month. If it's individual, somebody giving you the money, maybe you can get 12 or 18 months before you have to start paying. But the point being is cash flow becomes, because if I give you money, what's my first question? When am I going to start getting something back? So it becomes super important that you show strong cash flow in your business plan. Next slide, please. All right, character. Are you trustworthy? Do you have a personal and business credit history? Do you have integrity? Do you have good references? Do you have experience in the business? You're not just going into a bakery business because you like eating baked goods. An impression you make on the lender or investor. Remember, it's a selling situation. You're going to go in and you must sell them on your idea. This is what I call laying pipe. You're laying the pipe, you're going in, and if Steve's the banker, and I keep picking on Steve, but that's okay, I'm sure. If Steve's the banker, when I go into him, I would say, Steve, how is your bank on loaning money to startups? That's my first question. If he says, Joe, we'll loan to you, but we want nothing to do with startups, or it depends on what you're going to do, etc., I might get up and say, thank you very much, Steve. I'm not filling out an application. I'm interviewing him as much as he's interviewing me. Is he the banker I want to work with? And smaller regional banks or credit unions might want to grow with you. Perfect example, Bank of America. They're a huge bank. SCORE National does business with them. That's our bank for all of our branches around the nation. but they're lousy when you need a loan. They're atrocious unless you have tons of money and you can prove to them you want 50,000, but you got 100,000. Not an issue. Anybody will loan it to you. So character becomes important. Next, please. Capacity. Is your company able to repay the amount borrowed? How soon can you generate positive cash flow? This is all in your business plan. When will you show a profit? When I started my business, the first 2 years, I showed a loss. And that's okay. All right? Because I didn't have to pay taxes on it. And any monies I loaned to my company, as I started to take money out of the company, I didn't pay tax because that was a repayment of loan. I couldn't charge interest on my loan to myself. But if I got a client who paid me $10,000 and I decided to write myself a check for $5,000, but I loaned my company $25,000, the first $25,000 I take out of the company is a repayment of loan. And I have the record keeping that I've done to prove, even if it's in a simple Excel spreadsheet, loan to company. September 29th, sold computer and printer to my company, $600. Drove out to Glastonbury looking at an office, 30 miles round trip, all on the same day. And I keep those records. That's money I've loaned to my company. So when you start making money and you start pulling out insurance that I paid, the LLC, the sales tax, stationery, business cards, cell phone, forms, etc. Anything you've done. So that becomes important from the record keeping. And how soon you think you're going to show a profit. And what kind of margin are you working on? You should know your margins. In the restaurant business, it's like 55, 60% on food, more like 70% on booze. Next slide, please, Steve. Tanya just, or Tom, just how far back can you go with the expenses? If you've been in business 30 years, you can't go back 30. You could probably go back 2 or 3, but again, check with your accountant or whoever helps you do your taxes on that. I went back 2 years on when I started my business. So collateral, what kinds of security do you have? Is it a personal signature whereby you're putting up your home, your car, your etc. Secondary source of repayment. If you and your wife, or you and your husband, or you and your significant other are going to co-sign and you're leaving your job and the other significant other or spouse is still working and they're co-signed, that could be a secondary source of repayment. Third-party guarantee. You can't get the loan, but your brother or sister says, you know what, I'll co-sign for you, which means if you don't pay, they're obligated. But that's a third-party guarantee. And your assets, what do you have? I have $15,000 in the bank. I'm looking for $12,000. You're going to get the loan. I have $15,000 in the bank. I'm going to use that as part of my startup, but I need another $40,000. That's could be. And your property, whatever property you have, and equipment. And do you have accounts receivable? And do you have inventory? Now, I had clients who claimed to have a lot of inventory, and when I did checking with them and I went into their businesses and checked, the inventory had been around for 10, 12 years. It was junk inventory, but they were carrying it on the books. That's not really an asset. That we wholesaled off to raise some cash. But that's something that I do. Not all SCORE mentors do that, but Because one of the things I do is business turnarounds. That's my major business, and the banks send me people. SCORE doesn't do business turnarounds per se with hands-on. If that's what you want, I'm sorry, I can't help you because SCORE has ethics, and I can't pick up any clients from a SCORE base. So, but I mean, I will give you advice. I just can't pick you up as a paying client. I could be your mentor, but I can't do the work for you. Please, the next slide, Steve. Cash flow. That's pure and simple. Where's the money coming? And oh, by the way, when you say I need $50,000, have a breakout sheet showing exactly what the money is going to go for. $5,000 is going to be working capital. $10,000 is going to be a used truck. $15,000 is going to be this inventory I'm getting in, etc. A breakdown. And how much of a cushion should I keep? If you're looking for 50,000, I like to see 20-25% cushion. All right, so understand there'd be like 10 to 15,000. In the event you run short, you have a little money to cover you for until, because the bank won't. Remember, from banks, if you get the money today, you got to start paying it back next month. Let me repeat that. If I go to Steve's bank and he loans me $10,000 on September 28th, October 28th, I've got to make a payment. So that's the way banks and credit unions work. Unless you can get a deferment, like a 90-day note or something like that. And we don't have the time to really go into that today. Next slide, please. Credit reports. 700 or greater is desirable. Banks historically 650 or higher. Your personal credit report is available for free from www.annualcreditreport.com. Credit Karma is another one that does the TransUnion, Equifax, etc. And that's free. I use Credit Karma. I'm out there every 2 months or so just to check my credit score to see where I am. And by the way, what's nice about Credit Karma is checking your credit score doesn't ding your credit. You don't lose anything. So if you went out to TransUnion directly and did an inquiry or Equifax, you get a ding to your credit, meaning it could go down 5 points that you checked it. So use the free credit reporting and they'll show you your TransUnion and your Equifax. Next slide, please.
Hey, Joe, one other point on the credit reporting. Usually with the annualcreditreport.com, that's where you can go in and get your credit report from all three services. Right. You used to only be able to do that once a year. Since the pandemic, they're allowing you to check it up to once a week. So I don't know how long that'll last, but if you've checked your credit report recently, you can actually go back in again before that year's up.
Credit Karma is the other one, and that's absolutely free. And Good. You can check that every single day if you want. Okay, so even though this says bank loans, this is no matter what you're looking for money other than a grant, this is what you're going to need. A cover letter of introduction. Hi, Mr. Waxman. My name is Bill Smith, Betty Jones, and I got your name from XXX. And here's what I'm going to be starting a company that does dog grooming. I've been a dog groomer for the past 12 years, working for somebody else who recently retired and closed the business, didn't want to sell it, just closed it. So, and you just go through the explanation. Your summary of your financial needs. If you're in business, your business financial statements for 3 years. If not, your personal income tax for 3 years. If you're in business, business tax returns for 3 years. projected cash flow statement for 12 months, collateral, both business and personal tax returns, 3 years, even if you're in business, 3 years, personal financial statements, and your resume. Now, let's talk about the resume for a minute. It's not a resume of you looking for a job. It's a resume of your capability as relates to your business. I'll use me as an example. My resume would state the following. My name is Joseph Waxman. I have a master's degree in business. For 27 years, I worked at a company called Bell and Howell. I started as a salesman. I ended up as president. I learned management. In other words, it's your capabilities, it's your attributes. And the way I explain it to my clients is I could care less personally that you worked at McDonald's when you were in high school. And if you're going to be an insurance broker, what does McDonald's have to do with that? But if at McDonald's, you learn teamwork, customer service, you learned how to interact with fellow workers, these are attributes that will take you through the rest of your life. So it's not the resume of working at McDonald's, it's what you learned at McDonald's that's transferable to your existing business. So it's that type of resume. All right? That type of resume. So if you worked as a carpenter and you worked alone doing rough carpentry, and now you're going to be doing research, et cetera, by yourself, working as a carpenter while you, for as many years as you did it, take the attributes of working alone as a carpenter, what it taught you, and bring it in, because you want to prove to whoever's going to be loaning you the money. I don't care whether it's a bank, a credit union, an individual, Uncle Louie, Aunt Betty. I don't care. You want to make yourself sellable. That's why I can do this business. Okay. Steve, I noticed there's 5 chats. Is there any questions we should answer?
I think we've gotten everything.
Okay. Well, let's then go
Yeah.
on to the next one.
Yep.
All right. Financing from a balance sheet. Very difficult, kind of expensive. If you have, I had a client who owned a business of metalwork and had close to $200,000 owed to her. She had bought the business from her father, who was very bad at, I'm just going to let it ring, very bad at collecting money. So she had this inventory, this money coming in, but she didn't know how to go after it. And she needed money right away for a real good buy on some inventory. So we worked and we ended up getting money for doing her accounts receivable, but it cost her close to 19%. But the money came in quick, and as the payments were made, they went directly, even though the checks were made out to her, it was a situation set up with the bank that it went direct to the finance of the inventory, so to speak. Chattel mortgages, accounts receivable, plant improvement loans, conditional sales contracts. If you get a big contract, when I first went in business, I got a big contract. I got a big contract on a hospital down in one of the islands, and they refused they weren't going to give me any money up front. So I went to my bank, I showed them the contract, and I got the money to do the work. So it cost me some money, but I didn't have to lay out my own money to do it. So that works. All right. So please get a hold of your local SCORE mentor. There's 56 of us in Greater Hartford. And if for some reason, it's never happened in my 11 years, but if for some reason you have something that we don't have the expertise in Hartford, and again, it's never happened, there are 6 other chapters in Connecticut, and we can go out to them. There's over 300 mentors in the state of Connecticut. And as Steve said earlier, there's over 10,000. So we can go out and find something specific if we need to. But like I'll just give you an example. I had a client who needed digital marketing. Now, from those of you who can see, I'm a gray-haired dinosaur, all right? And I know something about marketing, but I'm not really up on the digital as well as maybe I should be. So I brought in one of our other mentors, and she really knows mentoring. We also had a situation on a nonprofit. My whole life I've been for-profit. I know nonprofit, but I'm not as comfortable with nonprofit as I am with a for-profit. So we have mentors who are specialists in nonprofits. So we can help you whatever you want. And again, remember the price tag, $0. If there's any questions, I'll be happy to try to answer them. If you want to open up the mic, Steve.
Sure. Yeah. So if you have any questions, you can either put your question in the chat, or at the bottom, there should be an option to select raise hand, and I can unmute your microphone. We still have a handful of folks on, and great information today, Joe. I think, a lot of clients that I interact with struggle with this concept of, what do I do if I need money? And
Exactly.
I think you probably outlined a good 20 options to think through today beyond the traditional just going into a bank, which obviously can be great, but sometimes it's just difficult to find those ideas to at least try to pursue. All right, I'm not seeing any questions so far.
Okay.
We'll do one last call in case we had questions. We did have somebody who needed to head out, but thanked us for our time. So I think that's it. So we'll wrap up here. I want to thank everybody for joining today. Thank you, Joe, for all this great information. And again, if there's any help you need in running your business, you can go to this website here, greaterhartford.score.org. Sign up for a mentor, fill out the form. It's a very short form. It's really just telling us what you need help with. And that'll help our office match you up with the right mentor who's got the area of expertise. If you need some help in marketing, you're not going to come to me. I'm a finance guy. But if you need help understanding your cash flow, you can come my way, or help navigating the financing world. Joe would be great for that as well. So,
but I also do startups. I do a lot of startups with people, because all startups have generally the same problems to get started. What do I do? Where do I go? How do I plan for bookkeeping, et cetera, et cetera? So there's almost all of our SCORE mentors can help you with that. But if you specifically say, I'm going to be selling medical devices, then Steve and I are not the right people to go for medical devices. All right. But we have people who have sold medical devices, so we can help you on that.
Great. All right, Joe, I think we're going to wrap it up there. Thanks again.
Okay.
Thanks everybody for joining. And if you need any help, you can check us out at the website below, and we'll see you soon. Take care, everybody.
Take care. Bye-bye.